Good afternoon. Okay, I will be teaching you the last portion of the funds flow statement now. With that, this unit comes to an end. Okay, students, fine. So I will now repeat once again. In fund flow statement, we'll be preparing three accounts. One we call it as schedule of changes in working capital, where we found out the increase or decrease in working capital, and then we prepared profit and loss adjustment account, where we calculated the internal sources of fund, which is called as funds from operation, right? And now we are coming to the fag end of this unit, where the last account what we'll be preparing is funds flow statement. Okay, so as I told you, in fund flow statement we are trying to find out the increase or decrease in working capital, as well as the sources from where you procure funds and how you are using the funds. Okay, so here the last portion in funds from fund flow statement, what you'll be finding out is what are the sources from where the company is getting money and how they are using or applying that money. Okay, that you can know by just going through this fund flow statement. So like a balance sheet, it is not actually a balance sheet. Like a balance sheet, you have two sides. One we call it as sources of fund. The other one you call it as application of funds, which is otherwise called as how we are using the funds. Okay, so this should be equal. Finally, if it tallies, that means you have recorded all the transactions correctly. Fine. Okay. Now here as I told you, in the external way you can get money from different sources. Okay, so first one is the company can issue shares to the public. The public will procure the shares. Maybe first year it is given equity shares 1 lakh, second year it is given 1,50,000. That means 50,000 rupees in case how we got, maybe the company should have issued shares. Okay, so that will come under sources. Issue of equity shares. Okay, or maybe issue of preference shares if the amount is more. Or similarly debentures. First year they had only 50,000. Second year now they are having 1 lakh, that is 50,000 more, which means the company would have issued debentures. That is also one source through which the company is getting money. Okay, and then maybe last year long-term loan, it was only 5 lakhs. Now this year it is 10 lakhs. That means 5 lakhs loan we have borrowed from the financial institutions, maybe from the bank or any other financial institution. That is also one source of income. So they can issue shares, or they can issue debentures, or they can borrow money from the bank or any financial institution through which they are getting money. Okay, this is three sources, the three sources which is available from external. And then maybe the company is having some internal sources of funds. We have already calculated. Where did we calculate internal source of fund, which is called as funds from operation, by opening the profit and loss adjustment account. So when there is any internal funds available, that also is considered as a source of funds. That is one more. So first is issue of shares, second is issue of debentures, borrowings from bank, internal sources, funds from operation. Then another one more source what is available is maybe the company would have sold some fixed asset. It might have become obsolete, out of date, or some new technology have come. In which case what they will do here is they will be selling that asset and they will go for buying a new asset. So when the asset is sold, that amount what you are getting, this is also coming under the sources of income. Okay, and if there is any decrease in working capital, that means the company has saved working capital, that also will come under sources. I think it is clear now. I will repeat once again. First one is issue of shares when the share price is more from compared to the previous year. Issue of debentures when the debenture price is more than the compared to the previous year. Borrowings from bank when the loan amount is more compared to the previous year. And any sale of fixed asset and funds from operation, internal funds. And the last one is if there is any decrease in working capital. All these we will be entering under the sources. If you look at this problem, like if you see the company have issued more equity shares. Okay, so I have written here under the sources. Please look at the PPT where I have mentioned issue of shares 50,000 rupees. Okay, and then there is the preference shares value has got reduced. Okay, now I will come to the application side. Application is nothing but the money what you have got for what you have spent that money. We should know about that. Only then the company can have control over the funds, that are being used. So for that, here, application side, what all will come is, for example, let us assume preference share capital was 2 lakhs in the previous year, and in the current year it is 1 lakh 25,000. 75,000 has got reduced. Why it has got reduced? Because it would have been returned back to the shareholders, which we term it as redemption of preference share capital. Okay, for this they have used the money and they have returned back the money to the preference shareholder. So redemption of shares, that is one application. Second, let us assume we have borrowed money previously for 5 lakhs. Now, the current year it is showing only 4 lakhs, which means 1 lakh got reduced. What does that mean? Very simple. They have given back the, some portion of the principal amount to the return there to the bankers. It is very clear. So, any borrowings, if it has been, paid off, then pay to the bank. Like that. That is one application of, that is another source. And then third thing is, similarly debentures. Previous year, it would have been, 5 lakhs, and this year it is 4 lakhs. That means 1 lakh is getting reduced. What does that mean? They have redeemed the debentures. So redemption of debentures. Okay. So redemption of shares, redemption of debentures, repayment of loan to the bank. All these three are very, very important, application of capital. Okay. Then, as I told you, maybe the asset has become obsolete. Now you want to go for the new asset, purchase of new asset. So when you are going to purchase a new asset, one new machinery worth some 1 crore they are going to buy, which means, they have to spend the money. They will be applying the fund what they have received for purchasing a new asset. So purchase of asset, that also will come under application. Okay. And then apart from this, we call, tax and dividend paid, tax paid, we are considering it as a non-current asset and fund flow statement. So any dividend paid to shareholders, any tax paid, that also will come here. And if there is increase in working capital, that also will come under application. Okay. Now I will tell you once again. So what all will come under application is redemption of debentures, redemption of share capital, repayment of any bank loan, purchase of any fixed asset, okay, anything, purchase of investment also may be there, and then, like you tax paid, any dividend paid, and the last one is increase in working capital. All these will be entering on the payment side, okay, or application side. After this, if you see, both the accounts has to tally, which means you have recorded all the transactions, accurately, and there is no error. So this, for funds from, fund flow statement helps the management to know where they have applied the funds and whether they have applied it in a prudent way or whether they have done any mistake, how they have to rectify. All that will be a learning experience for the management. Okay, so now I will tell you once again. First one is, I told you, fund flow statement is movement of funds or movement of working capital, movement of cash. Okay, so here with the help of this fund flow statement, one thing is you can know whether the working capital has increased or decreased. Another thing is, from where they have procured funds and for what purpose the fund has been used, that also you can know. Okay, and then how much internally they have realized profit. That also we can find out. Okay, so I will tell you once again. The first one, we are preparing the schedule of changes in working capital, where we are recording only the current asset and current liability. Okay, so you know what is current asset and current liability, and finally we are finding out whether there is an increase in working capital or decrease in working capital. Okay, that is over. The second thing is, we have to prepare profit and loss adjustment account. Okay, this account we are preparing only to know internal sources of fund, which we term it as fund from operation. Okay, here we will record only the non-operating expenses and non-operating income. Yes? Okay. Third thing is we are preparing fund flow statement where we are recording only the non-current asset and non-current liability, which means we term it as fixed asset and fixed liability and capital. Only these transactions you have to enter in fund flow statement, where you will know how they have procured the funds, the sources through which they have received funds, and for what purpose they have applied these funds, they come to know. So I think you have understood how we have to prepare this fund flow statement, and I will be sending you the assignment soon, and you have to work it out at home, and any like a doubt arises, you can always call me, or you can even send me message in our group, whatever. And please check the Moodles. I will be sending you the assignment soon. Okay, so with this I think I have wound up one part of the unit fund flow statement, and I learn it thoroughly. And as I always tell you students, as far as problem paper is concerned, like you cannot mug up and do anything. You have to work it out. Only when you keep working out again and again, you will know where you are going wrong. Okay, and then you will get lot of doubts which you can clear it out. This is one of the paper where you can score more marks, and for that you should understand the concepts thoroughly. If you understand the concepts, very easy. As I told you, working capital means current asset minus current liability. Internal sources of funds means operating expenses and operating income. You are adjusting with the profit. And the last one is fund flow statement, where you write all the sources of fund and application of funds, where you come to know how efficiently they have managed the funds. With this I will wind up this unit, students, and I'll come back to you tomorrow with another new unit to you. And thank you once again.